In this video, we'll look at all of the different trading bots on Bybit. If you're looking for an overview of what these bots are, how they work, and then what type of trading they're useful for, I'll explain all of that in this video. These 4 are in the trading bot page. There are also some other trading bots in the trading platform as well, so I'll go through all of them and how they can benefit your trading. I'll also leave timestamps down below for all of the different bots if you want to skip around. We're going to look at the DCA bot first though. So this one right here, go to tools and then trading bot. This is the main page. We're going to look at DCA or dollar cost average. Now, if you don't have a Bybit account yet, link in description to a trading and deposit bonus up to $30,000. So if you sign up for an account, make a deposit and trade, you can get a bonus up to 30K if you're new. So check the details via the link below if it's available for you. But we're going to go to DCA, so create now. Now, DCA is dollar cost average. So this is really a bot to just set up consistent purchases of cryptos that you want to buy. So obviously you need some assets on the platform first. If you are a beginner for Bybit, I'll leave loads of other Bybit tutorials for beginners below that go through the entire platform so you know how to actually get money in and out of the platform. But from here, very simply, crypto DCA, you have to have either US dollar tether or USDC on the platform initially. Now, if you don't have that, there's actually another way to do it with fiat currency as well, which I'll show you in a second. But from here, you are just adding cryptos that you want to buy consistently. So I'm going to go USDC because I think I've got some USDC. You can see I've got some of those dollars in the account right here. And then we're going to switch to BTC. And then we're going to add a crypto and we're going to search for ETH. So we'll click that and then we'll add, confirm. Now what this is doing is setting up consistent buys. So I want to go in, let's say a 80-20 ratio. So $80 and $20 here. So my total would be $100. And then that would be my dollar cost average. And I can set up the investment frequency. So I'm going to do this every week. And you can see the available balance isn't enough, but that doesn't matter for this tutorial. And then you can say max investment amount. So what we can do here is say, look, I want to do this for a certain amount of time, but I don't want to go past a certain amount. So maybe $1,000, right? So we're going to be dollar cost averaging 10 times once a week for 10 weeks, essentially. And then at this 1,000 mark, the bot will stop working. So you don't have to go in and cancel it, and it's not going to keep buying over that time. This is great for bear markets or just generally if you're looking to accumulate crypto, right? You can just set it up easily. It takes away all of the emotions and everything. And you know, over a bear market, which may be 12 to 18 months, you're just going to consistently buy during that time. You can set it up easily, put some assets on the platform. Now, if you don't have any assets or you run out of assets, then obviously it's just not going to buy. And what it's going to do is skip that week if you're on a weekly frequency and try and buy again the next week. And you can deposit some funds in there if you want. So that's exactly how you do it. Very, very simple to do that. Now, the other way to do it is actually through buy crypto. So if you don't have any stable coins to do this, then you can go to one-click buy. And then from here, you can go to auto invest. So click this and it's exactly the same thing. Now with this, it's a little bit different in that you can only choose one asset at a time. So we're going to choose Bitcoin here, but you can click and, dollar cost average into anything. And then you can actually choose fiat currencies. So down here, if I type in GBP, you can see that's there. Euro, is that there? US dollars, if you can get that on the platform. USD, that's there as well, right? This fiat currency. So what this is, if you want to actually deposit fiat currency directly into Bybit and not switch it into a stable coin to then switch it into a crypto, you can just cut that step out and auto invest here. So put an amount in, $100 weekly on a Monday, and that's going to take it from your fiat currency balance. So let's just do euro as an example. Your fiat currency balance will be in euro, and that fiat currency needs to be in your funding account, which it would be anyway if you deposited. So you can press continue there, and that just weekly buys the amount of crypto that you want. You can edit all of these orders and cancel them as well if you want to. You just go up to your assets here and then go down to bot, it's this one here, and then you can see all of your bots, right? So your trading bots should be here, your DCA bot right here. And if you have some a history right here, you can do that. On the right-hand side, it will say action. Then you can cancel the bot very easily. Now, that's for the DCA bot. For the auto invest bot, it's a little bit different. What you have to do is press orders. That takes you through to the orders page. And then down here, you need to go to buy crypto. And then this one would be one-click buy. So click that. And then it's in here, auto invest. So that's all of your one-click buy orders if you had them. that's your auto invest orders here. And from auto invest, that's the fiat currency DCA that you set up. On the right hand side, you've got action. You can cancel all of the bots and change them around. We'll move on to grid trading bots, which are very popular. They're definitely for more active trading, and they have a specific use case. Now there's a futures grid and a spot grid. I'll show you the spot grid first. These are exactly the same bots. It's just that this uses futures to trade, which you can use leverage with. You can bias towards being long and short, and trading fees are a bit lower because it's futures, it's derivatives. So these are a product that may not be available in your region. Spot grid is trading in the spot market. So you're buying and holding with cash or stable coins. You're buying and holding that crypto. Trading fees are a little bit higher because it's a spot market and you can't use leverage, but I think you can use a bit of margin here. So anyway, I'll explain what grid bots are and what they're good for and some of the pros and some of the downsides of them. So you can click this here, and what you're doing is creating a grid bot. So what exactly is a grid bot? A grid bot is a way to program a system to buy and sell actively within a price range. And what you're doing is trying to take profits from the volatility in between that price range. This can work really well in a specific scenario. And that scenario is essentially for the price at some level to move down and then back up again. Right? So you want the price to move within a range. You can set that. This is a grid bot here that's working. So you can see the upper range and the lower range. That is where the grid bot is actively trading. And so it's buying and selling at specific percentages apart, right? So you can say buy at 1% apart or 2% apart. So let's say it buys at 20,000 and then it sells at 21,000. So the price moves back down to 20, it buys again, moves back up to 21, sells again, moves back down to 20, buys again. So it just refreshes all of the buys and sells at specific percentage intervals within a range. The benefit of this bot is that it tries to make money out of that volatility. So it's trying to take actual profits out of each buy and sell. And it can actually be better than just buying and holding, specifically if the price moves down and then back up again. Because what you're doing is buying at lower prices, selling on the way up, buying at lower prices, selling on the way up. So that is where you can actually benefit and make higher returns within that specific price range. This is definitely for shorter term trading though, because let's say the price just moves straight up like this, then you're actually better off just buying and holding in a lump sum rather than using the bot, because what you've done is missed out buying at lower prices and you've actually just bought less crypto and it's gone up in price, because the bot has to use dollars or stable coins to trade and it has to put those stable coins across this whole range. And so if the price just moves directly up, it's worse than just buying a lump sum. If it moves down and trades in this range a lot, then that's great and you can actually eke out profits from that volatility. So this is a grid bot with loads of different orders in. This is on a different system. So you can see how it works, right? It has basically a buy and sell order around 2% apart, and it's just trading around 2% difference the whole time in a price range like this. So it's just constantly buying and selling and eking out, hopefully, some profits from that. I'll show you a grid bot that I've got running. It's not on Bybit, but it's on a different platform called Pionex. This is a grid bot that I have running for the channel so everyone can see a real bot in real life and what it does. What you can see here is that I started the bot a long time ago, around 35K at the start of a bear market. And I started the bot from 15 to 150K. So within that, 500 grids from 15,000 to 150,000, it's going to buy and sell actively every few percent or so. You can see that I've had over 2,000 rounds where the grid bot has bought and sold. And in the last 24 hours, because it's been fairly volatile, I've had 10 rounds. So 10 rounds of buying and selling. I'm just taking a little bit of profit out each time. Now you can see the price when I started was around 35 and the price now is around 35. And so or a little bit below 35, I think. So the actual capital gain is in a loss, but I've made around 3.5% in grid profits. You can see that up here. So throughout this whole entire bear market, what the bot has been doing is buying crypto lower and taking around 3.5% profit out of this trade. So I'm actually better off in this bot than I would have been buying a lump sum because I've been able to buy lower. If the price just moves directly up, I would have put less down into the trade and be worse off than buying that lump sum. So this trading bot has worked really well through a bear market because I've been able to trade at lower prices, accumulate at lower prices, and then take profits out of the bot, which is around 3.5%. So I've made 3.5% on Bitcoin throughout the bear market, over and above what I would have made just buying and holding. So that's where it works. It works best, I think, where prices come down and you can trade that volatility and then prices move back up again. When the bot stops, between 50 and 150, if the price keeps moving up, then I've basically sold all of that crypto again. So what I can do at that point, if I want to just buy and hold the crypto, is stop the bot, take all of the dollars out, and then actually just take another position, either with another bot, or I can change the parameters and anything like that. So very similar on Bybit. So we can do that here in the AI strategy or the manual strategy. So AI strategy is where you just let the bot do its thing and put all of the parameters in, or you can manually set this up yourself right here. So what I'm going to do is actually go over to the trading system, because this is a little bit easier to see. So you can go to trade and then spot trading and trade the asset that you want to trade right here. If you go over to tools, so that's right here. And then from here, you can just choose spot grid bot, and then you can put all of the parameters in. This entirely depends on you and what you want out of the bot and how active you want to be, how long you want to be in the bot. So the bot that I set it up for the channel, and so I put a huge difference between the top and bottom of the bot, and very wide percentage differences so that I can run the bot a long time. If you're looking to trade volatility short term, then it's better to choose a price range that's very narrow, because what you're doing is you're putting an amount of dollars into the bot, and then you're saying trade between a price range. So if your price range is very wide, it has to split the dollars up a lot between that price range. So each of your trades is a lot smaller in dollar terms. The best way, obviously, would be to have a very short or narrow price range, and then have a lot of dollars trading each time. But of course, we don't know where the price is going to go. We can make best efforts. So if you're trading shorter term, the best is to have a very narrow price range. Or if you just want to let the bot run a very long time, you can have a wide price range. But of course, you're splitting the dollars up between a much wider range. And so it's going to be a lot harder to make profits, right? It's going to be a lot longer term. So the AI strategy is telling us that this price range is pretty good from what it sees. I think it's a little bit a little bit wide, right? So we'll go to manual. We'll put the price range in here for 33,000, and then we'll put the upper bound at 40,000. And then the number of grids, we'll just choose 50 grids for now. So what we're saying is, we've had a big run up here. I would hope that the price comes down, maybe. You get some sellers coming in and maybe force us down. That would mean I could buy these, and then we get some volatility, right? So my hope would be it would be like this, kind of trading down a little bit, goes this and then up, right? So volatility here would be good. So what we can see is that it's $140 interval per grid. That's the price here, right? So every $140 it trades. Now that's a profit per grid of around 0.3 to 0.4%, as you can see here. A little bit different because obviously we're doing a dollar difference in the grids, and that's a different percentage depending on what the price is. And then you can just put your investment in here, whatever you want to invest. So you start that, it's active trading. So it's definitely better for active trading where you want to eke out some profits. And of course, if it's volatile within this range, then good, because you trade more often and you refresh the bids more often. You can have advanced settings here as well, where you actually tell the entry price. So if you don't put this in, it just starts the bid straight away and it starts the first grid here buying. If you want to actually say the entry price, so you could put, let's say 36,400, something like that. So you just wait for the price to drop down a little bit before actually starting the grid bots. So you might want to do that, but I think just starting it immediately. Stop loss and take profits obviously important because you are buying crypto here, right? So you're not immune from losing money, because what can happen is you just you're buying all of these different grids, right? And so you've accumulated some of the crypto and then it just keeps moving down. Well, you're going to make a loss on that crypto, right? So what you can say is, let's say if the price does move down to 30K, we can just put our stop loss in. What this means is any crypto that you've accumulated in the bot so far gets sold back out for dollars and you stop the bot. And then the take profit is, of course, if you've accumulated crypto at whatever, maybe you want to take profits at a certain level, which would be this spot right here. Because if you don't take profits, then the bot obviously keeps the dollars in there, and it's expecting maybe the price to come back down into here and then start trading again. So what I would say is that bots, there's no panacea, right? You can lose money because you're taking risk here. However, they have a specific purpose to trade and take profits out of volatility. And that's exactly what they do. I have found that from, running these bots, is that they do exactly what they say on the tin, which is they try and take profits from grids. You can see I'm making a 3.5% profit in the grids. And because the price moved down, I've bought crypto at lower prices. So 3.5% profit from those grids. But of course, you can still lose money because you're taking long positions here in the spot market. And if the price goes down, you'll obviously lose money. But that's exactly how they work. And you can set them up either very, very short term like this, or just very, very long term as well. I'll touch on the futures grid as well because there are some differences here. Firstly, futures trading fees are much lower than spot trading fees. You can also trade with leverage because you're in the derivatives market. And also you can go long, short, or neutral. So what we can do is press create now. And it's the same bot, it's the same system. You just have these different options. So what I'll do is go over to the trading system because I think it's easier. So derivatives, and then choose the asset you want to trade. Go to tools up in the top right and click futures grid, which is this one. Then we can see here, we can actually choose between setting up the bot with neutral, long, and short. Very simple. If you go long, it means it buys immediately and it wants to buy and then start trading. If you go short, the first trade is a sell. So you're looking to sell and then, buy back lower. So that would be still taking advantage of volatility within a range, but this just buys first at the base price. This sells first. And this one actually doesn't trade straight away. This will actually just have a grid in between the price, right? So let's say this is the base price or the mid price right here. Neutral strategy will not buy straight away. It will actually place a grid or this price directly within the middle of a grid, and then whichever way it goes, it will either sell first or buy back, buy lower, right? So neutral is just in between. Long will buy at the base price, and short will sell at the base price. That's kind of it, right? So I don't think there's any real difference here because you're still buying and selling grids within a range. It's just what you want to start off with. We'll just go long as an example here. So cross, what's the price range? We are going to trade between 33,000 and 41,000, and then we'll just do 50 grids like this, and that should populate right here. Okay, so we're just trying to take advantage of volatility within that range, and you can see the profit per grid is around 2.5 to 3.4%. That's here. Arithmetic means the difference between each grid is a dollar amount. So whatever it is, let's say it's $20 difference between each grid. Well, $20 is a different percentage of the prices that we have. And so that's why it gives us a range of the amount of percent profit per grid that we're making. You can also choose geometric, which is a specific percentage difference per each grid, which is here 2.9%. Which one is better? I don't think it matters too much. It's not a big deal because we're trading short term in the futures market, probably trading between a fairly tight range anyway. So probably not a massive deal. You might want to go with either one. It's up to you. As you can see, the difference is very, very minimal. So I don't think it matters that much. And then just put the investment in here. So that's really the difference with futures. You can use leverage like this. So we're using 5x leverage as an example. And you can choose this. Now, the big thing with trading in futures, of course, is that with futures, you just put money into fund trades and fund losses. So you can use 5x leverage, meaning if you put $1,000 into the bot, you're going to be trading with $5,000 in the market, 5 times 1. What that also means is that you can get liquidated because if a $5,000 position moves by 20%, that's $1,000, which wipes out your capital. So what we need to be making sure of here is that the amount of leverage that we're using, our liquidation price is not within our range. Because let's say you have this grid trading in a range and the blended price that you get from buying, well, 20% below that, if you're using 5x leverage, is your liquidation price. It's going to be around 20%. It might be a bit different based on, what you've been trading, if you've made profits in the grid, trading fees and everything like that. So let's call it around 20%. So you have to make sure that your blended price right here isn't so wide that you're still running the bot and you could potentially be using so much leverage that you're getting liquidated. So you have to just make sure that you're aware of where your liquidation price would be, right? On a 5x leverage, your liquidation is going to be around 20% away from your entry. but that's going to be a blended price of what you're buying here. Like I said, with bots, you can lose money if the price just goes down. Right, it keeps going down, you're going to lose money. So what you can do is go to advanced settings, put your stop loss in here. So your stop loss should be at a price above a potential liquidation so that you can get out of the trade and that you're not paying liquidation fees or anything like that. You'll never go into a bad debt because the system will liquidate you if you're making a loss of all of the money that you put in. But with leverage, of course, losses and profits are amplified, and there is that liquidation penalty. With the spot grid, all you're going to be doing is just buying if it moves down and then just holding that crypto. And so you can just hold it there and wait. But with a futures position, if it does go down where your liquidation is, you're going to get stopped out. You can, of course, when opening a position, put more dollars into that position to reduce the leverage, and that's up to you. But that's just the differences with futures grid is that you can choose those specifics, use leverage if you want. You have to be a little bit more careful with it though. We can also use the Martingale bot. This is again for short-term trading. This is in the futures market. So futures Martingale. What is a Martingale? This is an active trading strategy where you're looking to take a long position or a short position and you don't know where the price is going to be. So you want to take multiple positions during a trading range in order to benefit from a reversal in price. So let me show you how that kind of works with this. So what you're looking to do with Martingale is rather than taking a long position, so we'll just go with long position here. Usually with futures, you want to take a position, so you want to get a position, and then you're looking for the position to move upwards if you're taking a long, right? What Martingale does is say, I want to take a long position, but I want to benefit if the price comes down and put more in at that level to reduce my entry price. And then I want that move to the upside to sell it. So this is still active trading and it is still risk, but you're just using bots to try and get better entries. Now with Martingale, it's a little bit different because Martingale as a strategy puts more in as the price comes away from your initial entry. So with the Martingale, let's say here you put $10 in to begin with, then you say at a specific price level to the downside, I'm going to put $20 in. And then if you move down here, I'm going to put $40 in. And that's my position. So rather than putting $70 in here, right, up the top, and your whole position in, you're saying, I'll put a position in here, which is small. And if the price moves down, I'll keep adding actually more than before. And then if we get a reversal, I can actually sell not up here, but I can, sell above my average entry price. So this comes with risks, obviously, because you're putting more in as the price comes down. It's definitely for an active trade. I would say if you're looking to take a long position in a trade, this is probably a perfect example. We've seen a massive move to the upside. And what you're looking to do is say, okay, so I want to trade, because we're obviously in a massive uptrend and expansion right now. I want to go long, but I also don't want to put all of my long in right here, and then the price moves down and I get wrecked. Right, so what you're looking for maybe is to say, okay, I want to put an entry in here going long. If the price moves down, I just want to add, and then hopefully we can, come up again and kind of bounce. If you think the price action will do that, then a Martingale would obviously suffice there. So what we can do with Martingale is two things. We can either do DCA, which just means put $10 in at each price level below, or you can do the actual Martingale, which expands the amount of money you put in per trade. So futures Martingale, AI strategy does it for us here. That's a long position. You can do it to the short side as well, which is where you start higher and taking short positions. We'll just stick to long. So we're going to go manual here, and then we'll click AI strategies just to implement that. So we're using 3x leverage. The price decrease triggers an addition to your open position when the market price rises by a specific percentage. 5% rise triggers an open additional short order. That's for the short side, but we're going long. So we're actually putting another order in if the price decreases by 0.6%. Let's change that to 1%. And then the position multiplier here. If you put 1, that means that, let's say you start with $50. As the price moves down 1%, you put another $50. As the price moves down another 1%, you put $50 in. We've got 3 rounds, so that would be the three rounds of $50. You can put between 1 and 2. So 2 would be doubling your position size on each of these rounds. And then obviously 1.1 would be a 10% addition each time, right? So 10% bigger than the first, and then a 10% bigger than the second. Let's do 1.1, so that would be 10% increasing. And profit target per round, this is where you're saying, what your profit target can be, right? So let's say you've made entries, you made 3 entries, couple of percent apart. So you've done that. And then you're looking for, basically what is your take profit target at that point, which as the AI put in around 4%. So let's do, 3% like this, and then just choose the investment that you want in, right? So this is a very, very specific strategy of thinking that I basically want to take a long position and I hope the price goes up. However, I also want to take, advantage if the price comes down, I can get a better entry. But of course, you may not. It may just move up and then you haven't got your whole order in. But this is just a way to be a little bit more active and kind of automate that process. And then you can put the investment in here. And then again, as you can see, advanced settings just gives us that stop loss. If you're using leverage, then you might want to put a stop loss in there just to make sure that whatever your stop loss is, what you're comfortable with. You can also click this button on and off, which is enable loop. So this is where let's say you make that profit. So you have the martingale where you've bought 3 times, you've made your profit, which is your take profit level here, whatever that may be. The profit target, right, per round 3%. You can loop this to actually start those buy orders again and actually buy at those specific percentages on the downside. Now, at this point, I would say that probably moves more into actually having a grid bot. If you think the price is going to move between that level, a grid bot might be more suitable. This may actually start trading orders where don't really want to be in them again, because once a trade has worked out, if it's gone down and then it's gone up again, you might want the market might be completely different and you may not want to be looping those. So you may just want to turn that off. It's up to the individual trader, but then you can just press create for that bot. Within the futures market, Bybit also has a couple of different order types which can actually really help with your trading. First one we'll look at is TWAP. Click this. This is time weighted average price. So you can get into or out of orders rather than all at once. You can just do it through a time weighted average price. So let's say I want to trade 1 Bitcoin. And I want this bot running for 6 hours. What this is going to do is, instead of opening that position all at once, it's going to open that position over a 6-hour time period. And the price that you're going to get is the time weighted average price of that 6 hours. And so this would be better if you're going long, if you think the price may go down a little bit in that day. But it's just giving you a average price over that time. So I'm going to trade 1 Bitcoin over 6 hours. You can see the frequency is every 30 seconds. And so it's going to keep putting orders in every 30 seconds and hoping to get filled at an average price over that time. You can see it's trading 0.001 BTC per sub order every 30 seconds. So I'm going to get an average price for my entry that is what was traded over that time by the market. You can click this as well. So random order, the quantity of each order will be split and adjusted within a certain range, typically 20% kind of either way. You can do that or not. That doesn't make too much difference, but this is a way of saying, okay, I'm ready to enter the order and I'm going to do it over this day, 6 hours. So I get a decent price from what the market actually traded, because we know how many times you enter an order and then the market just immediately makes you offside by 2%. You're like, annoying. Well, TWAP can just give you a blended, order price for that day. So that's opening, and you can close this way as well. So you can just say, I've made profits. I want to close my long. I want to close 1 BTC long. Just do it over the next 8 hours, and it's just going to drip feed that into the market. Scaled orders are a little bit similar. What you can do here is put a lot of orders in on the book all at once. So if we click scaled orders under tools, you may have traded like this before, where you're putting multiple bids on the bid side of the order book because you want to get a good price, and you're saying, well, I want to enter, but I know that the price moves around, so I'm going to put an order in at 36,540, 36,538, 36,520, 36,510, right? I want to scale my orders on the bid side of the order book to make sure that I get kind of blended price, and I think that the price is going to move down and I want to bid. Well, rather than doing that manually, you can just do it right here automatically. So we're going to go open. You can choose the leverage when you're trading futures, but we're going to open 1 BTC and we're going to have, let's say, 5 orders. These orders are now in a ratio, right? So they're 20% of the trade order size each. So each of them is, obviously 5 orders is 20%, making up 100%. And then you can put them at different prices. So we're going to do a price range of, let's say, 36,300 to the downside, and then 36,500. So we want to, scale our bids on the order book between this amount. And as you can see here, it's doing that. So I've got a bid in at 36,500, a bid in at 36,450, 400, 350, 300. And I just enter all of those bids at once. So I can scale in my trades and bid on the order book, right? Just a little bit more professional way of doing things. When you're looking to buy, I want to scale my orders in. Now you can change these as well. So let's say 18% here, I want to put 22% here, and that makes the 100%, right? You can change these all around. You can evenly split them, increase, decrease, right? You can see exactly, right? So again, maybe you want to start with a smaller amount, and then as the price moves down, you want to bid bigger amounts. Absolutely amazing for more professional trading, scaling your bids or your offers onto the order book. We can also use chase orders on Bybit. These aren't the most useful types of orders, but we can use them. Chase limit. I'll show you the infographic here because it makes more sense. What you can see here is that we put a buy order in at a specific distance away from the best bid if we're a buyer. And then we say we're $50 below the bid. We're happy to chase that bid up if it gets away from us up to a certain point. And then we don't want to keep chasing it anymore. So if the price moves up, we chase it up. So we actually increase our bid price. If the price moves back down, hopefully we get bid at that higher price. So again, if you're willing to pay a higher price, why not just trade straight away, right? So kind of not that useful, but you can choose this if you want. So what we can see here is ask one, bid one. This is the best bid and offer, or the bid and ask right here. So the best bid and the best ask, you will be those plus a distance. So you can say I want to trade 1 BTC and my max chase distance is $50. That means if I'm buying, my bid is right here at this best bid, and I'm happy to chase $50 to the upside. After that, I don't want to chase it anymore, right? So if you're worried about the market moving away from you, you are going, this ask one, bid one means you are the best bid. So if you're buying, you're the best bid. You match the best bid here, and you're willing to chase up by $50. As you can see here. If you don't put this in, what you're doing is just matching the best bid at all times and chasing upwards potentially to infinity. So that's what that means. If you go for a distance, what you're saying is, I want to be $50 away from the best bid and best ask. So if the bid is here, you're $50 to the downside, and you are always there, and you're going to be chasing up infinitely. Or you can say, I want to be $50 away and my max chase distance is $100 to the upside, but I'm still $50 away from that best bid, so that hopefully it moves down again and I get hit. So again, not the most useful, because I think if you want to trade, you just kind of do it straight away. But they might be useful if you want to try and put some bids and offers in. You want to kind of match the best bid, and you are willing to chase, but hopefully you don't have to chase and get a worse trade. If you're new to Bybit, you can get that trading and deposit bonus up to 30K via the link down below. I'll leave some other helpful videos for Bybit and trading futures and other types of trading down in the description as well. I'm James, this Money's EG. Cheers for watching, and I'll see you in the next one.